Over the next few days, you're going to see a few clips from my interview with Monique. She's with Dominion Lending. She's a registered agent in both Ontario and British Columbia with access to all of Canada. She's an expert in mortgages. She's been in the business for many, many years. I've worked with her personally and referred clients to her, which we've all had an unbelievable experience. She's a wealth of knowledge, and I hope that you all learned something from her. Welcome, Monique. Thanks so much for being here.
Well, thank you so much for having me.
Yeah, so I thought maybe we would just dive right in. I have a couple questions for you, and hopefully you can do your best to answer. What is some general advice that you have to future and current homeowners?
Those renewing within the next 2 years. So anyone who locked in to a fixed in 2020 or 2021 will be coming up for renewal, likely locked in for 5 years. So they're going to be coming up for renewal within the next couple of years. I advise all clients who did do that to look at planning what your payments are going to be when you renew. Start now. Prepare yourself now to basically ensure you're not getting the shock factor of when you actually renew, because your payments will be higher, even though in hopefully a couple of years we'll see a more neutral state with rates. But curbing spending is a good idea because of inflation right now. So that's going to help with anybody with higher mortgage payments. So that's my advice in today's climate.
I totally agree with that advice. And leading into, when is it a good time for homeowners to refinance? Are you seeing a lot of refinancing currently in this market?
In this market, no. Refinancing is a very personal thing. It's really about timing for obviously the client, but most importantly, if it's possible, to hold off on refinancing until you're at your maturity. And the reason why I say that is because if you do it prior to your actual maturity, you're paying a penalty. That penalty is based on whatever term you signed with your particular lender, but it could be quite high in today's rate market right now. But some people are in a situation where they absolutely have to. So if maybe they're looking at needing to draw equity to pay down debt to get them out of really high interest debt, or maybe they're looking to manage their monthly budget a little bit better by extending their amortization. Again, very unique. There is no one size fits all. Just because it might be a good time for you, might not be a good time for me. It all comes down to that client's situation at that moment. And again, comes down to talking to the right people. So definitely you want to talk to someone in the mortgage industry. At the same time, you got to remember that we're in a very interesting time with respect to, do people even qualify? So there's that qualifying factor as well. So that's why I talk to a professional with respect to anything. But that's my advice. And any client that comes to me to refinance, it's a whole picture I look at, and an advisory picture, whether it's a good idea, not a good idea, in many different factors.
What is your perspective today on what's happening in the current housing market?
We're in the eye of the storm right now with the worst behind us. And what I mean by that is that we're not going to have consistent moments where the rug is being pulled out from underneath us. That's already kind of in the past because of how the rates went up so quickly and just out of nowhere. Nobody was even expecting it. Even the economists were quite shocked. So being in the eye of the storm, there's still that storm. So we still do have some ways to go. We're still in that space, and we're probably going to be there for another 2 years. So inflation has to come down. Once inflation comes down to where the Bank of Canada wants to see it, which is 2%, it has to be sustainable. So it's not just once we get to that, ooh, all of a sudden now rates are going down. No, it has to be sustainable. So if it happens by, say, 2024, if at any point during 2024, we've still got some time that we have to allow that sustainability before we start to see rates come down. So economists are saying we're not going to see rates coming down until 2025. I like to err on the side of caution and think conservatively, especially after what's happened over the last 18 months. I personally think it's going to be closer to the end of 2025. So I say 2 years because we're approaching the end of 2023. So, and in 2 years, what we'll see is more of a neutral state. So people's psychology is changing, and in the sense that they're realizing this is the reality and this is going to be the new norm. We won't see rates the way we've seen them over the last, like, even decade. That's part and parcel to why we are where we are today in terms of the high inflation. So we will go into a neutral state, and that neutral state is going to be probably around between 4 and 5%, which is just under about 3% on average, lower than what we're seeing today.
Right. So people just need to prepare themselves for that and start budgeting, start thinking ahead. And what do you say about the people who are thinking about downsizing? You know, they have these big mortgages, they're going to be coming up on renewals. They're thinking about, you know, selling their property and getting into something smaller.
Well, again, it all comes back to talking to the right people, talking to the professionals. So make sure you've got a realtor, right? Mortgage broker, financial advisor. Do the math first before you decide on anything, because the math might not actually work with what your intentions are. And what I mean by that, any clients of mine that come to me and say they want to downsize, I'll do rough calculations. I'll do the rough math for them. And that math is essentially, what is their actual market value of their property today? Like, what are they conservatively going to get out of their selling their property today? So we take that amount and then we have to back out everything. So realtor fees, we have to back that out, back out any debts. So including any existing mortgages. If it's not yet up for renewal, there's going to be a penalty. We have to back that out. Then, of course, we have to take into consideration legal fees. And then if they're buying something else, they're going to be paying taxes. So whether it be a resale property transfer tax or whether it be a new build, they're paying tax on that as well. We have to back all that out. What is going to be the approximate net? Of that net, what's that going to get them? Are they hopefully going to be able to cash buy something on downsizing? Or are they going to be able to take a good amount of money as a down payment, have a lower mortgage with hopefully a lower monthly payment, keeping in mind rates are much higher today? Do they intend on having a nest egg put away a certain part of their net equity? So doing that math first and kind of seeing where they're going to end up is going to help them decide whether or not it's even doable, possible, or advisable for them to do it at this time. So that's first things first. And then once you get to that point, then you start planning. But I see it all too often, people do it backwards, right? People just think, oh, I'm going to sell my, big $1.5 million house and I'm going to go into an $800,000 condo. Well, you have to factor in all of the costs that it takes to actually do that. And then what are going to be the new costs, right? Because a lot of people, like I find middle-aged people approaching retirement, they might be empty nesters. They're going into a condo while not thinking, well, condos still have property taxes, but they also have maintenance fees, which can add up, right? It can equal essentially what a property tax could cost on a home. So it really comes down to talking to professionals and making sure you're getting the right advice before making any major decisions.
Absolutely. I think that's great advice. I think you're right. A lot of people do it backwards. They think it's just a quick and easy deal. They can just sell this property and move into something smaller, but you really have to sit down and do the math and think it through before you're even thinking about doing something like this.
100%. Yeah.
And can you touch on what happens if a homeowner misses a mortgage payment? For instance, are they given any grace, or are there any serious repercussions?
There is no grace on missing a payment. It's just a no-no to do that, because yes, there are repercussions about not paying a mortgage payment, and it's not good. In reality, people know where they're headed. So if someone is on the verge of missing a mortgage payment, it's not because, oops, they forgot to make their mortgage payment. It's usually adding up for a long period of time. That maybe they're just, someone's lost a job, or their mortgage payments have gone up so much that they just can no longer make those payments. They know that well ahead of time. There is a runway there. What's so important, again, talking to professionals. So the minute you start feeling like there's a pinch, you need to talk to either your lender or your mortgage broker and figure out, okay, this is what is essentially needed to get you by. Is there any way to kind of get you by? For instance, some lenders, not all, this is really, really important, and this is why you want to kind of nip it in the butt before anything, not just let it go. Some lenders will allow deferred payments, and deferred payments is basically postponing your payments. Okay. It doesn't mean your payments, they're taking away, you don't owe those payments anymore. You do owe those payments. They're just postponed. Not all lenders do that. And the lenders who do allow that, that was actually a big thing during the pandemic. Lenders just kind of stepped up to the plate and said, listen, we'll defer your payments just to give everybody a little bit of breathing room. But it isn't just a regular rule with all lenders. So it's important to know through your lender whether or not they do. And if they do, there is a process. That might be enough for some people to tide them over. And if it's not, or if the lender says no, then you have time to be able to do what you need to do to essentially either try to borrow money from maybe a family member or sell the property. If there's a missed payment, essentially lenders have the right to start the process of power of sale with just one missed payment. And not only is one missed payment just bad, it's a mark on, it's a bad mark on your credit. If the process of power sale starts, that's even worse. So it'll be even harder for anybody to get a mortgage in the future. So that's why I'm saying allow yourself a long runway. Talk to the appropriate people. Of course, financial advisor is a good one also. But power of sale, if the process starts, they give you notice, and that gives you the time to also plan your exit strategy. And 9 times out of 10, if you're at that point, it's selling the property. So don't miss a mortgage payment is what I'm saying. Talk to your lender, your mortgage broker, and financial advisor if you have one before getting to that point. Just know ahead of time that you need to plan a strategy.
Totally. And by, missing a payment, if the power of sale process starts, then it would be better in this situation to sell the property, go through the math, the numbers, and get into something lower. Maybe you need to move to a different town that's cheaper. There's definitely options. And I think your advice on speaking to professionals and really understanding and looking at the market and seeing what you can actually afford is the best option.
Yeah. And doing that, and again, being very aware of your financial situation, allowing that runway, because if you get to the point where you've missed a payment or the lender has started power of sale, the likelihood of you getting a mortgage on something else is going to be very, very slim, because you've really made really bad mark on your credit. So just be very aware of your financial situation. If you're having any problem at all, if you just don't know, if you're confused, you're stressed out, that's what the professionals are for. Talk to them first. Don't sit in silence. It's definitely not the way to go. You want to nip it in the butt before anything bad happens.
Totally. I think it's important in today's market that we make it, accessible and open for anyone to come and speak to professionals, because I think there's a lot of embarrassment, but there's a lot of people in this boat, in the same boat, facing these, interest increases, and it's going to hurt some people. So to just get ahead of it, to speak to people instead of being embarrassed, there's nothing to be embarrassed about. We're all here to look after each other. So
absolutely. And that's why we do what we do, right? We want to help people. I've been doing this for a really long time, and that's always been my ammo. That's my number one thing. I want to help people. And if it's just a matter of just, educating, answering questions, if that helps somebody, that's what I'm there for.
totally. Well, you're very good at that. So
Oh,
thank
thank
you
you.
so much.
I love it. So I think it makes it easier when you love what you do, right?
Totally. Well, we always learn something when we talk to you. So thank you so much, Monique.
Oh, you're so welcome. It was so nice seeing you. And yeah, I'm always around for questions, so never hesitate.